Welcome to our weekly market review brought to you by ETM Analytics and TreasuryONE. As usual, I'm joined by TreasuryONE's currency strategist, André Cilliers. André, a thing that we thought, the possibility was there that it was going to take weeks and days and there was going to be drama, ended up like just being done and dusted very quickly. Donald Trump into the White House. And now that the circus is finally done, bandankie toch, the campaigns are now over, we can actually get back to focusing on the real structural fiscal developments in the US. One of them being this week's CPI, newly inflation data, will be out on Wednesday. Kind of expecting that it will continue to moderate, I'm assuming?
Yes. As far as Donald Trump is, he's still staying down in Miami or Palm Springs or wherever,
Mar-a-Lago.
Yeah, where that is. He's not the president as yet, because remember, he said that once he becomes president, he's within 24 hours, he will get this war between Ukraine and Russia to stop. Now, if I listen to what happened over the weekend, he's still not the president. I mean, they're enjoying themselves, and I think because they know that it's going to be over in 24 hours after January, they're getting all their drones up in the air now. But let's rather talk about US inflation and give Mr. Donald Trump a little bit of a rest before he becomes president. US inflation due on Wednesday. Will the slowdown continue or will inflation re-accelerate? Okay, so I think this round it still comes down. If I look at oil prices, if I look at what happens in the world and so forth, then I think it could still come down. The risk to inflation, to me, lies more once Mr. Donald Trump is actually out of his golf estate on and staying in the White House, taking 2 paintings and a couple of hotels and moving in there. That's when we could possibly see inflation showing its head again. And why do I say that? Well, that's when he will start with his tariffs that he wants to impose on China and the rest of the world. And that, we all know, filters through to prices, filters through to the consumer that actually pays for that extra tax collection that he imposes on those countries. So for now, I think still downward, but there's a risk. And that risk we'll closely monitor as things change from a governing perspective by Mr. Trump.
Kind of an event that took a backseat last week out of the US was the Fed making its latest rate cut decision. Powell moved in line with market expectations, coming down 25 basis points. But what you mentioned now, André, actually feeds into that as well, because, we are seeing these possible inflationary risks, hovering on the horizon possibly. And we saw actually markets pull back on rate cut decisions. I think they're now only anticipating 3 rate cuts up until the end of next year. So definitely, we saw last week Powell moving with the 25 basis point cut, and markets pulling back on their expectations because of it.
Yes, Mr. Powell lifted a little finger last week. And that little finger that he lifted was speaking about the very big deficit that the Federal Reserve, what the government is running. And he lifted his finger and said, guys, this is getting out of hand. Our debt as a percentage of GDP is not sustainable. So he lifted a finger and said, we need to address that. And that could be where tariffs comes in, as I've now mentioned before, and that could have an impact on inflation. So I expect the Fed to be a little bit more cautious and a little bit more conservative going forward. They've now given 75 basis points, the 25 basis points basically going down as a bit of a non-event because it was widely expected. But I think going forward, that little finger that Mr. Powell lifted tells me that cautiousness will be at the order of the day from the Federal Reserve going forward. And I think they will also wait to see what is happening from a Trump administration. One thing that Mr. Powell also said is he cannot fire me. Now, those words also once again lifts that finger and says, you know what, I know that you favor low interest rates, Mr. Trump. It's not most probably what you'll get as far and as quickly as you want to see it, but you cannot fire me. I have a fixed term and I will see it out. So cautiousness from the Fed is what I expect.
Yeah, it's one of those things that was noticeably absent from both campaigns, from both the Democrats and Republicans, was the really in-depth solutions that they could come up with addressing the state government debt, as well as the deficit that they're experiencing. A lot has been said about tariffs and social plans and all of that and tax breaks, but nothing really concrete about how they're going to tackle that deficit. By the way, ETM director and myself, George Glenos and myself, a discussion about what we could see from Trump last week. The podcast is available on Markets Magnified on YouTube, of course. But what we are looking for, obviously, is what can we expect for the Rand this week now that this uncertainty that we saw around the US election is finally out.
Okay, so if we look at the Rand, then I think, it was widely spoken that after a Donald Trump win, we might see a strengthening dollar, and that could impact on a weakening Rand. Now, the dollar did strengthen, and we are seeing the dollar quite a bit stronger than what it was before the election results. And there was a very quick move once it got known that Mr. Trump is winning. The impact on the Rand was quite a bit up, quite a bit down, and where we are now, saying a non-event. That's if you look against the dollar. I think let's look at further graphs on the Rand, because that also tells an interesting picture. So here we look at the Rand versus majors. It says laggard against the pound. But if you look at this graph, then the Rand is actually, for a long period and sustainable period, now done very well. Against the euro, it's now well below the 19 level. Against the pound, even though it says they're laggard, it just simply means that it moved more against the euro and less against the pound. We're standing at well below 23, 22.85. The euro standing at 18.90 and been trading below those levels of 19 and 23 for a substantial period. So if you really view the Rand against a basket and look at the Australian dollar here as well, then it simply says that this currency of ours is actually doing pretty well at this stage in terms of strength against other currencies. So our local factors are still filtering through to protecting the Rand, if I can say it in that terms. And I think that will last for a little bit longer. We continuously hear about rumors of a GNU not doing well, but it's going well. And it's still filtering through to the Rand. So Rand remain within the 17-18 bracket very comfortably for the moment.
Hopefully we can continue to ride out the year with this strength supporting, and let's just, I kind of want all surprises just to calm down until 2025. That's where I'm at after the year we've had. But André, we will have a good week hopefully this week, and then we will catch up again next week.
Okay, as a closing comment, we have to wait and see what our monetary policy does, whether that's going to be a 25 or a 50 basis point, but we have more than a week left, so we'll discuss that next week.